and welcome to Sectors Up Close. I'm Elena Casas. Our focus today is cryptocurrency and our guest is Randy Watts, the Chief Investment Officer at O'Neill Global Advisors. The world's biggest cryptocurrency is, of course, Bitcoin. Its price soared to well over $50,000, giving it a market capitalization of over $900 billion. The recent surge took place after Tesla, MasterCard and Bank of New York Mellon all either bought cryptocurrencies or announced they would facilitate payments using Bitcoin or other digital currencies. That's fueled gains in other coins such as Ethereum and Dogecoin, boosting funds like this one that track a basket of currencies, although Bitcoin is by far the lion's share. But there are plenty of skeptics out there. Some say it's a bubble, others argue the rise of cryptocurrencies may be a side effect of the decline in the US dollar and too much central bank QE. Well, let's ask Randy Watts at O'Neill Global Advisors what he thinks. Hi Randy, thanks for joining us. It's been described as the new gold and also as a sign of a new world order where the US dollar becomes less important. What do you think?
I think first for your viewers, I do believe cryptocurrencies or digital currencies are a real emerging asset class. I think they're here to stay. I think it makes sense for investors to have some exposure to them. I do think people are looking for a store of value, especially given what's going on with the amount of dollars that are being printed, by the Fed and also by the amount of fiscal stimulus that's coming down the pike in the US. So I think people like the fact that with Bitcoin, there is a finite amount of Bitcoins that are ever going to be created. And so people believe that that can be an inflation hedge in the future. And I believe that's one of the main things that's driving institutions now to start to look at the digital currency.
Where do you think the valuation of Bitcoin might go then? Some, such as JP Morgan, have said it's overvalued now.
I think Bitcoin's here to stay, but I think it's going to be a volatile ride. It's up over 70% year to date. It's up over 400% in the last year. It's had periodic pullbacks of anywhere from 30 to 80%. I think we're unlikely to see an 80% pullback, but I think a 20 to 30% pullback is well within the realm of the normal volatility for this instrument. So if I was looking to invest in Bitcoin, I might buy a toehold right here, but I don't think I'd want to go all in right now with it trading north of 50,000 per coin.
Given the risks then, how should investors approach the sector if they're new to cryptocurrency?
Well, there's several ways to buy and trade Bitcoin. Obviously, the biggest one is Coinbase, which is a digital wallet that users go in and set up. But I think important for individual investors is a lot of more traditional ways like PayPal and Square are going to start allowing individuals to buy and sell Bitcoin. There is not currently a listed ETF trading, but those are coming, it appears, for Bitcoin. And there's also some derivative plays like Silvergate Capital, which is a bank in California, which we think is an interesting stock, but actually has a crypto exchange. That stock's been doing quite well. So I think one of the messages for investors is it's been a little bit tricky to get in and out of these digital currencies, but they're going to be a lot easier to trade going forward. And I think that adoption is actually going to help prices over time.
Thanks so much for that. That was Randy Watts, Chief Investment Officer of O'Neill Global Advisors. Before I go then, here are some of the top stories in the sector. Online broker Robinhood says it will allow customers to deposit and withdraw cryptocurrencies, including the meme-based Dogecoin. The trading app currently allows customers to buy cryptocurrencies such as Bitcoin on its platform, but users can't withdraw their assets to transfer to other wallets. In a series of tweets, Robinhood said on Wednesday it doesn't currently invest in cryptocurrency or use any customer cryptocurrency for its own benefit. Major Bitcoin backer MicroStrategy on Wednesday increased its debt offering to $900 million, with the proceeds of the sale to be used to buy more Bitcoin. MicroStrategy said the notes have a 0% coupon rate. The company started amassing Bitcoin last year and holds about $3.7 billion worth. And finally, Canada's main securities regulator has cleared the launch of the world's first Bitcoin exchange-traded funds. Ontario Securities Commission okayed the instrument last Friday. Managers of the Purpose Bitcoin ETF claim it will be the first to invest directly in physically settled Bitcoin. Until now, investors have been able to either buy Bitcoin derivatives on the CME or invest in closed-end investment funds. And that's your roundup of the cryptocurrency sector. I'm Elena Casas, and this is Reuters.